Hey, welcome to another episode of Financial Theory. I am doing a quick video addressing what actually happened with AMD stock, their earnings beats across the board. So let's look at the key metrics here. So Q1 2026 for AMD, revenue 10.25 billion, up 38% year over year. Gross profit 5.4 billion, up 45% over year. Gross margin 53%, up from 50%, which is very good as well. Operating income 1.4 billion, up 83% year over year. Operating margin 14% and expanding fast. Net income 1.38 billion, up 95% year over year. That's nuts. EPS diluted $0.84, and that's up 91% year over year. So these are very impressive numbers. So let's look at why this actually matters. Some of the key takeaways that you need to know about AMD stocks. So the operating leverage kicked in really hard. Revenue up 38%, operating income up 83%, net income up 95%. There's a big gap. The fixed costs are being leveraged. So what's actually happening is that AMD is not just growing, it's actually becoming a lot more profitable per dollar of revenue. So they're improving their margins, which is what we wanted to see as AMD shareholders. Now, second point is that margins are expanding, very important. Gross margin went from 50 to 53%. Operating margin expanded even faster. So what this is actually telling us is that AMD is selling higher value products like AI GPUs, data center chips, and they're having better pricing power. And essentially AMD are shifting towards more the data center segment because that's where the margins are, that's where the bulk of their money is coming from. So it makes sense for them to actually start focusing on the data center segment because that's where they're going to make most of their profits. So the third point that I wanted to make was that AI data center is the core driver of this recent growth. So the data center revenue is up 57% over year, which is huge. So this quarter, it's not about broad-based growth. It's essentially AI infrastructure demand driving pretty much everything for AMD. Another takeaway is that expenses are rising, but slower than the profit, which is good. So the operating expenses are up about 34%, but the revenue grew faster and their margins expanded. And this is ideal, obviously. This is what we want. So what is happening is AMD is spending more, but earning way more, which is what we want to see as an investor of AMD. So the other thing was that earnings quality is strong. Profit nearly doubled, which is very good without any weird one-offs. EPS growth was about 91%, which matches their net income growth about 95%. So this shows that it's a clean earnings growth and there were no accounting tricks done with this. So some hidden costs, what we need to be aware of. So one is that the growth concentration, there is a big risk here because it's the AI data center that's doing pretty much all the heavy lifting for AMD's growth. So for example, if AI demand slows, AMD's growth will slow down very quickly. The other note is that the cost base is still rising. So AMD's OPEX is up 34%, which is high. So if revenue ever slows down, margins will compress very quickly. And the other thing you got to remember is that we're still in the early phase of AMD growing here. So they're still setting out a early margin profile versus their peers. So 53% gross margin is good, but it's still below NVIDIA's levels at about 70+%. So here's the bottom line with AMD stock right now. Bottom line is this was a high quality breakout quarter. Revenue growth is very strong. Profit growth is explosive. Margins are expanding, which is one of the key things we want to take away from this. The driver is essentially AI and it's very real and it's no longer hype. So this is the simple takeaway for a retail investor. AMD is currently transitioning from a growing company to a scaling profit machine. So if this trend continues, valuation expansion is justified. Yes, you can see here net revenue grew 38%, which is great. Cost of sales went up 31%. but it's not as bad because the net revenue was still growing more, which is good. Looking at here, total operating expenses, 34.5%. The big ones were the operating income increasing 83% year over year. Net income increased 95% year over year. And the diluted earnings per share increased a whopping 91% year over year. And there was also another big piece of news regarding AMD. So as of May 2026, AMD CEO Lisa Su has announced a bold long-term growth target for the company's AI data center business, projecting average annual growth of over 80% in the coming years. So this is huge. So growth is driven by intense demand for AI inferencing and the adoption of AMD's Instinct GPUs and EPYC CPUs. So this is huge. So now Lisa Su has actually increased her outlook for AMD's data center segment. So they're expecting an average annual growth of over 80% in the coming years. So, ooh boy, yeah, this is going to be exciting stuff for the next few years, that's for sure, if you're an AMD shareholder. Let's go back to these incredible numbers. So the operating income up 83%, net income up 95%, diluted earnings per share up 91%. So here's the amazing part. So this overall is a fantastic income statement. They smashed it. But the amazing part is these numbers are not even including the 450 series. AMD is going to release their 450 series later in the second half of 2026. And that's the one that's going to be the game changer, the one that's going to challenge NVIDIA. And we haven't even seen those numbers yet. And I'm already blown away by how big AMD has grown. So the party's just getting started. So the second half of 2026, when the 450 series will be released, oh my God, AMD stock is going to skyrocket even more. So what you're seeing now is just the entree. The main meal is still ahead of us. So load up, boys, load up. So if you're an AMD shareholder, hold on to your butts because this ride is going to be good. So guidance for AMD Q2 2026 was also very good. So they're expecting approximately 11.2 billion, significantly exceeding market expectations of around 10.5 billion. So this forecast implies that there's a robust year-over-year growth of 46% and 9% sequential growth driven by massive demand for AI data center GPUs and CPUs. So obviously this is showing that there's a lot of strong momentum in the data center sales. This is a big part of why the stock jumped up so much after the earnings were reported. So this jump indicates that AMD is becoming much more efficient at turning sales into profit. Diluted EPS up 91%. So for shareholders, the increase means that it gives a very clear justification for a higher stock price because the earnings in the PE ratio is expanding rapidly. Also, the margin expansion. This is one of the most important details in AMD's first quarter 2026 highlights. In the semiconductor world, margin expansion usually suggests a shift towards higher value products, for example, like the AI accelerators or high-end data center chips, which command better pricing. So the combination of nearly 40% top line growth, the revenue, and nearly 100% bottom line growth, the net profit, is exactly the fundamental breakout that will drive sustained momentum in tech stocks. So I'm expecting AMD's stock price to continue going upwards. So also the document shows that while net revenue grew by approximately 38%, the bottom line metrics grew at more than double that rate. So explaining this, while the net revenue increased by about 38% year over year, the total cost of sales only rose by 31%. So because the costs associated with producing the goods grew much more slowly than the revenue generated from selling them, the gross profit jumped by 45%. And this led to gross margin expansion from 50% to 53%. And this indicates either a lower manufacturing cost per unit or a shift towards higher price premium products. In AMD's case, it's obviously the latter. AMD has stated that, by shifting their business more towards the data center segment, they're commanding higher prices, their margins are increasing, and they're making more profit overall. Total operating expenses grew from 2.9 billion to 3.9 billion, an increase of 34%. Research and development did increase by 39%. MG&A increased by 41%. The result is that even though these expenses grew, they were still eclipsed by the growth in gross profit. And another point is that because the gross profit was significantly higher than the total operating expenses, the remaining operating income was magnified. So this slight improvement in expense to revenue ratio combined with the 3% margin expansion is what allowed the operating income to surge by 83%. So this shows you that once a company covers its fixed costs, a larger portion of every new dollar of revenue drops straight to the bottom line as profit. This is what we're seeing with AMD at the moment. So this is showing you how operating leverage creates an exponential impact on profitability. When a company's revenue grows faster than its operating expenses, the gap between the two, the operating profit, widens at an accelerated rate, which is what we want to see as an investor. And we're showing the efficiency in gains. So in March 2025, AMD's operating expenses were approximately 39% of its revenue. By the quarter ended March 2026, even though the company grew massively, it held its operating expenses roughly 38% of revenue. The company kept its overhead, the fixed and semi-variable costs, in check while their revenue climbed. So its operating margin improved significantly, went from 10.8% in 2025 to 14.4% in 2026. So this 3.6 percentage point improvement in margin applied to a much larger revenue base resulted in the 83% jump in operating income. I'm going to quickly explain why this actually matters for AMD's valuation. This magnification effect is why the stock market often rewards companies that show even small improvements in gross or operating margins. So it shows that AMD's infrastructure, R&D, and administrative teams are becoming more productive. They are supporting billions of dollars in new sales without needing to hire an equivalent ratio of new staff or rent significantly more space. So the surge of net income from 709 million to 1.38 billion, 95% increase, suggests that the growth is not coming from selling more stuff, but selling more profitable stuff more efficiently. The statement also shows AMD increased R&D spending by nearly 670 million year over year. Because their operating leverage, they were able to fund this massive increase in innovation while nearly doubling their final profit for shareholders. That's incredible. So March 2026, even though the company grew massively, it held its operating expenses to roughly 38% of revenue. There was a ton to unpack there. Oh wow. I'm so glad I loaded up on AMD in 2025, thinking that AMD is one of the hottest stocks in the stock market at the moment. And with these numbers, I think we have to revise our AMD projections as well. What's going to happen with this stock in the next 5 years? Well, obviously all the numbers blew me away. So they were a lot better than what I even thought they were going to be. So the 450 series, AMD hasn't even released that, and that's going to be the game changer. That's going to be AMD actually challenging Nvidia. So what we're seeing now is the entree, guys. The main course is still ahead of us. So very exciting times for AMD shareholders. I can't be any more happy. So every day I wake up seeing my portfolio keep exploding. So very exciting. Remember, guys, the party's getting started. I believe, late 2026, early 2027 is when we'll start to see AMD's numbers really take off. That's it for now. I hope you guys enjoyed this video. If you did, give this video a thumbs up, comment, share, all that stuff. I'll catch you guys in the next video. See ya.